Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me will be Ajay Sharma. And for now, the market is holding on to gains. Yes, it's off the highest point of the trading session, but we did scale that mark of 21,600 on the intraday basis. From there, we have just pulled off a tad bit. Same can be said about Nifty Bank as well. 48,000, that crucial level has been held for now. So that's a good news, even though the index is almost 150 points or 200 points off the highest point of the trading session. India VIX, that has been seeing quite a bit of spike this week. A couple of days ago, it was up around 8%. There was a surge of 5% yesterday as well. Today as well, that is up around 5%. So past the level of 15 on India VIX. Of course, tomorrow is expiry. So ahead of that, a bit of volatility is something which is expected. Cement pack, that is building on to gains today. Take a look at Ultratech Cement. That's managed to hit the record high level. The market capitalization of 3 lakh crore has been surpassed today. So good going for the cement stocks. And it's also PSU banking names, autos, metals. All of these spaces are seeing quite a bit of buying interest. So quite a bit of a varied set we have for ourselves. But the big question is, where do we go from here on? And do we build on the gains from here or not? Kunal as well as Naresh with us on the show. So let's start with just that. Kunal, 21,600 was, kind of breached, but then we kind of came back from that level. And ditto can be said about Bank Nifty as well. But at least 48,000 is being held. What are the levels to watch out for from here on?
So yeah, I think 21,500 could be a support for the index on an intraday basis, even on a short-term basis. I'm assuming till the expiry tomorrow, and 47,850 now on the spot Bank Nifty would become the first leg of strong support for the index. I think the only change which you're seeing today, one of the changes which you're seeing today for the banking index is comeback of the PSU banking lot, where you've seen the likes of Bank of Baroda, SBI, Canara Bank, etc. making a strong move for themselves. Individually, many of these stocks are showing signs of a breakout. So I think that's a positive sign for the markets, and especially for the Bank Nifty.
In fact, PSU banks is something which you marked, but beyond the banks, PSU is actually cooling off. Remember, there was a one-way rally which pull up the Nifty PSE index. You would see Power Grid, NTPC, several of these IREDA we've already seen. A lot of PSU which have done phenomenally well, but now are kind of, on the verge of stretching their valuation just beyond logic. Those kind of names are witnessing a good amount of pullback. Let's see how it goes from here on. But otherwise, last couple of days, only the large cap, the ACCs of the world, some Ambuja and maybe Ultratech we're seeing. Now we're seeing broad-based buying after that report from Nomura as far as the cement space goes. Otherwise, okay kind of a market. Several IT names are doing well. Consumer names are also doing okay. It's a mixed kind of a market, auto as well. But Mahentesh Sabard is now joining us on fundamentals. Mahentesh, afternoon. Thank you so much for your time. Beyond, say, PSE basket, not PSU banks, which is correcting, one section of the market which is helping is the beaten down Kotak and even HDFC Bank, which has tested the patience of investors almost 3 years now. Kotak is at 1900. Around 2000 is where it topped out last, if you pull up the slightly longer term chart. And at that time, it became the most valued bank, private bank in Asia. Even your HDFC Bank, the individual entity last time topped out around 1700 odd. Now the merged entity is available at 1700. How do you see these two names in particular on valuations?
So you're right that the market has been very patient with these two banks in terms of the overall returns that they've been able to generate in the past several years. But there's a reason behind that. And that reason has got to do with the fact that these banks have grown pretty fast in the past and have consumed certain other banks, or there have been mergers along the way for them. And they therefore received a lot of attention from investors in the past. Now it is back to basics where it comes to the banking sector per se. And when it comes to basics, they have to now perform well beyond peers. Even the PSU banking peers, particularly SBI, which is the largest bank, has been doing particularly well. With the NPA cycle now down, all these banks are actually struggling for growth ahead. And this is where the PSUs are doing relatively better than Kotak Bank and then HDFC Bank. So I guess that there'll be a little more wait before these banks start doing well. Particularly, these banks are consumer facing. I'd say more into personal banking kind of activities, personal loan kind of activity, which has kind of picked up now, picked up for the time being. It's a matter of little more patience before these banks will start really doing well. 3 years is a long period of an underperformance that we've seen for these banks.
Actually, I would request you kind of pull up the graphics of, the top drags on the Nifty and top contributors to the Nifty, record high level that we saw, because a very interesting trend that my colleague Singh and Vamakshi had pulled out. While on the contributors, it was HDFC Bank, which was the top contributor in the last few days. Reliance, Kotak Mahindra Bank, Airtel and Hindalco. The key drags on Nifty was ICICI Bank, Bajaj Finance, Axis Bank, and even SBI and Tata Consumers. Nuresh, a question on this underperformance of ICICI, Bajaj, Axis, SBI. Any signs that they are likely to see a bit of a reversal?
So in terms of names, ICICI Bank still looks positive because it is retesting that breakout around that 1,000 mark. And it has been holding on around that 980,000 mark. It's not corrected much. It's just that it has not been bouncing as sharply as what we are seeing in a Kotak Bank or a HDFC Bank. But the structure looks positive. But Bajaj Finance, on the other hand, has continued to face resistance around that 8,000 mark. And in this recovery also, 7,700 has become a problem. So actually the stock looks more sideways. And 6,800, 7,000 is the major important base. If that breaks, then the trend changes on the downside. So overall, Bajaj Finance looks like a stock which may stay in a very range of 6,800 to 7,800. But ICICI Bank at current levels actually is a good entry point with a short to medium term outlook, wherein the risk reward is pretty interesting with a stop below 970, 980.
Another stock which I want to discuss with Kunal, which is kind of a HDFC Bank in the auto space, which means it hasn't done anything much in the last 3 years, is Bosch. I remember very clearly, Bosch was so badly punished, I remember. They started talking about something EV at a time when, they announced a EV foray, market completely ignored it, punished it, because at that time, bulk of their engines and all the technology was diesel oriented. It took them 8 years, how many years?
8 years. 2015 is the top.
Last top was 2015. It's crossing that 8-year high level.
It's not yet crossed, but that
in that near vicinity.
So 27,000 became 7,500, and now it's 22,000 again.
So 22,000 now, right now, was last seen in 2015, right?
Correct.
So it's now going back to it.
Yes.
80% of the fall
It's coming back into its prime.
At least it is retraced 75-80% of the fall.
Correct.
So when this type of if you can pull up the longer term chart of Bosch India, guys, if you can just also show it on the screen. So what does it show from here? Would you like to ride that stock long, or what?
Yeah, I think it's a good chart. So shaping up well. So volumes, when volumes make a comeback, we typically tend to say that the stock has coming back to its prime, and when the prices tend to move in a very trending kind of a manner, devoid of the volatility, that's also another sign of confirmation. I think Bosch has shown both those signs emerging quite well. In fact, the average volumes over the last 3-4 months has been on the higher side for the stock. It's managed to break out of the resistances, retracements, and even the major breakout which has happened for Bosch is that trend line. So from 2015, when the stock was at 27,000 levels, there was a major trend line resistance which the stock held on for at least 3 to 4 years before it started to sell off quite aggressively. So it's managed to finally breach those trend lines in just the last 1 to 2 months. So that itself tells you the kind of change of sentiments for the stock price. So change of sentiment happens first, and then the prices get into a breakout, which I believe is the case for Bosch. So it's a good sign to go long as well as build up long positions over here.
Okay, Bhante, you've seen Bosch in its previous prime days. Do you think it will come back? Because EV now seem to be the flavor of the season. These guys announced foray into EV related parts some 8 years back, but did not get due recognition in these 8 years.
You have to look at it this way. The overall EV presence of a Bosch in India is pretty poor even now. For that matter, much of the EV space is yet to grow out into a large momentum in India. And therefore, Bosch has taken a really long time to really grow in that business. So 8 years for a Bosch-like company is pretty small given its vast history that they have. And they're an engineering company at the end. these companies do recognize the trends that are happening and they are able to adapt to the underlying trends. In fact, I would say that they were quite early recognizing trend and started making arrangements for that foray into EV when virtually no market really existed in India. It has still a long way to go, and one should be cognizant of the fact that an engineering company like Bosch has the wherewithal to bring in latest developments, not just latest developments, actually out innovate existing players in certain areas. And I'm sure they should be able to better grow relative to the market ahead. Their engineering capability is just stupendous.
Totally point taken, but let me flag out some of the other stocks and news as well. Cement Pack, as I pointed out, is fairly active, right from Dalmia Bharat to Aramco Cement to other names as well. Nomura actually came out with a fresh note saying that the margins are expected to expand on the stronger volume growth which is expected. There's a bit of pricing discipline that has come into the system, and the fuel cost is also something that is going to support the earnings going forward. They've upgraded Ultratech, Dalmia Bharat to a buy from neutral, and those graphics will come up for you on the screen very shortly. Bajaj Auto is the other one that is up almost 3%. DAM Capital has actually increased the target price all the way to 7,200 rupees from 6,000 rupees, saying that the company is quite confident of growth as well as exports is something bouncing back. And lastly, of course, are the big listings today that happened. Happy Forgings, which listed at quite a bit of premium, actually added on to those gains, and now it's tempering a bit. You also had Credo and RBZ, which had a flat listing to begin with, but from there they've actually managed to gain ground. Look at Credo Brands, which is now up 14%. So after having a listing in a bit of a discount zone, it's actually managed to gain quite a bit. In fact, as we head into this short break, listen into the commentary coming in from all the three IPO companies as to what the prospects are going forward.
Right. The other look at that. Bajaj Auto is actually gaining further. After that upgrade came in early pre-market actually, for almost 3.5%. So at day's high is what Bajaj Auto 7,200 right is the new target which DAM Capital has put out. Out of that, 250 or 230 bucks got gained today itself. But I want to go back to oil exploring companies. Mahantesh, in the last few weeks, ever since Oil India actually came out with the volume target, they've shared it on the exchanges. ONGC as well as Oil India both are doing well, and a lot of being bet that maybe this part of the energy pack may actually start doing well. It's not moved much. Pull up the last 3 months or 6 month graph, you would see what I'm talking about. But the basic elementary question is that ONGC output on gas as well as oil volumes has been stagnating for decades now. Where will the incremental earning come from?
Yeah, that's the right question to ask from the company. Actually, these companies have seen stagnated production for quite some time, and they're tightly controlled in terms of regulations as well. So any avenue for growth should come not just from the domestic producing fields, but now will have to come from exploration outside the Indian geography. And there we find limited appetite being shown by either ONGC or Oil India per se. So from an investor's perspective, I think it's better that these companies should be viewed as more as dividend kind of stocks and not necessarily growth stocks. Sometimes, in fact, even dividend stocks will also suffer because their stock price keep correcting. So these new targets that they have given may not necessarily be achieved going forward unless there is a resolve to get the capex going quite well. In oil production, it's but natural to expect that old producing fields will start showing a decline because there is a definite life to any particular field. And if you need to pump up the oil further from that field, you need to invest a lot more in terms of capex to make that oil field produce better. So it's a trade-off between higher growth achievable through higher volumes, but you need to spend a lot. So I would reckon that this short term these stock movements probably are short term movements.
In the meantime, Naresh, what's happening to the stock of 3M India? We don't usually talk about that counter because it's not a big mover as it is. Today, the volumes are 28x the average that we have seen, and there's a sudden spike of almost 14-15% on that one. And the other one I want your view on is Vinati Organics. There was, of course, a news flow that we'll run for you as well, but that stock is perking up.
So 3M India is a pretty illiquid stock. Otherwise, the stock had been consolidating. Today, the breakout has happened, and it tends to make such spiky moves which are difficult to trade. And the stock is at a new all-time high, and we've seen all, say, capital good related spaces do well. So a fresh breakout here, but tough to trade this one. So it's a stock for an investor, not much of a trading bet. Going into Vinati Organics, the stock has gone sideways, has not seen a correction sharply like the rest of the chemical names. It has just been drifting lower. So as of now, it looks like a one-day move, expecting it to remain sideways.
Point taken. In fact, on the auto sector, I want to scratch that point further with you, Mahantesh. Bajaj Auto, of course, the one that we have been talking about on one hand is doing quite well because they are sustaining growth is at least what DAM Capital is saying. But that brokerage house itself has come out with a note on the tractor industry saying that we are in for a big sequential decline in the month of December. Call it the impact of the floods and the unseasonal rains. But there's going to be a sharp dip in the tractor volumes. Within the three packs of auto, two-wheeler, commercial vehicle as well as a passenger vehicle, which do you think is the best place from a risk-reward perspective?
I think currently the commercial vehicles are better poised relative to the other two that you named, the tractors and the passenger cars, simply because commercial vehicles seem to be now going up the cycle in terms of volumes. Plus, you also have an advantage coming in the form of better margins with overall commodity prices easing out a bit. That helps the commercial vehicle manufacturers in terms of their margins. As far as tractors is concerned, it too is cyclical, and we have seen an unusually high jump in volumes, particularly last year. And therefore, the tractor volumes are set to cool off pretty sharply, given the high base effect. Passenger cars is a nowhere kind of territory right now because you have subdued discretionary spends that are happening all across the board in any kind of consumer category that you are seeing. Plus, you have this whole phenomenon of electrical vehicles coming in, but adoption by customers is pretty tepid because there are a lot of question marks in terms of the cars availability itself, as well as the drivability of some of the cars on the electric vehicle side. So the markets, most of the buyers are actually waiting out to see which are the better cars that will come out with options that help them meet their either the daily commute kind of requirement or the travel requirement that one possesses. So that's why I said we passenger vehicles are a nowhere territory right now. Commercial vehicles potentially can do better among the three.
Flag a few stocks. So 3M India is what we've pointed out, a 13% surge. Take a look at Amara Raja Battery. Suddenly there's a spike of 5% on that one. You also have Chalet Hotel, which is suddenly, take a look at that one, quite a bit of heavy volume suddenly coming in. And even Chalet Hotels for that matter, 2.5% move suddenly coming in on that one. On the losing side, it's Happy Forging, Sundaram Clayton and the rest of the names which are there on the list. But Kunal, anything on the charts of Amara Raja Batteries or Chalet Hotels that would warrant a look?
Yeah, so Chalet Hotels is something which I think is looking attractive. It's confirming a flag pattern breakout. So the move for Chalet Hotel in the last 1 month, specifically from 550 levels to 650, is quite attractive. It's also on the back of some heavy volumes for the stock. So I think there was a point where the stock moved from 550 to I think 610, 614 levels, and that was a jump of volumes, almost a 20x jump of volumes for the stock from an average of 1 lakh, 1.5 odd lakhs towards 20 plus lakh for the stock price. So I think that's been a change of trend for Chalet Hotel, and it's now seemingly the stock coming out of a consolidation. So would be keen towards buying the stock even at current levels, and with this formation, it could probably lead to another 30 to 40 point jump into the stock price. So which means closer to 700, 720 as a target.
In fact, not only Amara, but even Exide is crossing the 300 mark. Between the two, between Amara and Exide, which chart looks better to you? Nuresh, you want to take that one?
So actually, both the stock look pretty interesting, but Exide looks promising for the fact that it is making new all-time highs and has been trending strongly. So for a choice, it is Exide which looks more promising.
Okay, point taken. So both of those charts look quite attractive. But on that note, Mahantesh, we let you go. Thanks so much for making time and speaking with us. As we head into this break, let's get you the latest what's happening in Tamil Nadu. It's time for the latest from what's happening in that particular geography as well. Over 50 people have been hospitalized due to the ammonia gas leak from Murugappa-owned Coromandel International's fertilizer plant. My colleague Dharani is joining us with the latest on-ground report. Dharani?
Well, the latest update, one more latest update is that 42 people have been hospitalized after this ammonia leakage that happened in a subsea pipeline, that belongs to Coromandel International Limited. Right now, I'm standing in front of the company, and the tank over there, you can see a tank, on that side of the, the company premise. That is the ammonia storage tank, from which, through subsea pipelines, ammonia will be carried, through the sea to ships. So, in one of those subsea pipelines is where this leakage happened, is what we're given to understand. And of course, the National Green Tribunal is going to take a suo motu cognizance of this matter. Right now, they are in the year-end holidays, and as soon as the National Green Tribunal opens on January 2, this matter will be taken up, on suo motu basis by the National Green Tribunal, is what we're given to understand. And you can see in the visuals over here, these are people belonging to the surrounding villages, Chinnakupam, Pereyakupam, Thalangupam, etc. And they've been sitting here since early in the morning, hundreds of them, and their only demand is that Coromandel International Limited has to be shut down permanently. They are telling that in the early days of December this year, we had an oil leak in Ennur, and now there is an ammonia gas leak. So we cannot live in this hostile environment among companies. And as far as Coromandel International Limited is concerned, the company has to be permanently shut down, is what they are telling. They are telling that they were all of them, they are telling that they were experiencing severe eye and chest burning sensations, and in fact some of them even fainted, and they had to be rushed to hospitals, is what they are telling.
Welcome back. Well, the Nifty is actually surging as we speak. It's 21,650. You would assume the 3 p.m. move would actually come on the day of expiry, which is tomorrow. But no, people are already factoring that 3 p.m. move today itself. 21,700 seems likely on the card today itself, if this is the ferocity of the move that we are talking about. Let's take a look at the key, ingredients of the Nifty as to see which are the stocks which are rallying. I think HDFC Bank is the first stock which will come up for you on the screen. 25 points is that stock individually was just contributing to the index. Infosys is also the other one which is higher by 1.5%. L&T is the other stock, and then ICICI Bank too. So quite a bit of surge on the banking names as well as the Nifty index itself. But we are seeing quite a bit of surge in the cement stocks as well. So let's quickly go across to Asesha to get a sense as to why Nomura is so positive on the counters and the reason for the upgrades on a slew of counters. Hi Asesha.
Well, yes, Nomura has come out with a positive report on the cement sector, where they've gone ahead and upgraded ratings for 3 counters and hiked target price for 5 cement stocks. They say that margins are expected to expand on account of strong volume growth, price discipline and lower fuel costs in the past couple of quarters. They expect strong volume growth to sustain in the second half of the year, and that volume growth over FY 23-26 will be above what we saw in the past decade. As far as price hikes are concerned, they expect price hikes to sustain, and that recent channel checks also suggest that the outlook for the industry looks very bright. So for Ultratech Cement, they have upgraded the stock to a buy rating from neutral, hiked their target price from 9,300 to 11,500. For Dalmia Bharat as well, they have upgraded to buy. Revised target price stands at about 2,900, and for Ramco Cements, they've upgraded the stock to buy from their earlier neutral rating, hiked target price to 1,250. So on the back of this very bullish report that has come in on cement from Nomura, all these counters are in focus.
Bhadang is also joining us from Centrum Broking to talk to us about the cement sector. Mangesh, the first question, do you think the move on the stocks are warranted? Is there a genuine volume and pricing uptick that one should expect?
Hi, good afternoon, and thanks for having me. So we have recently done a channel check on the sector. So the pricing did go up in the months of September and October, but we have seen correction in prices as well as in demand in the months of November as well as in December. So there have been multiple seasonal festive related factors, and also we've had state elections which have dampened the demand. And we have a very large upcoming event in terms of general elections in May. So our expectation is that just before and after the election, there should be some slowdown in overall cement demand. But as I said, the first half of the year, we have seen really high growth, almost 16.5% demand growth was there. And in third quarter, probably we should be doing around 10% and in single digit in 4Q. So that momentum in our view is actually declining. And with a lot of capacity additions that are on the line, we believe that pricing might come under pressure. So the stocks have seen the rally, and I think it's better to take some money out. So we are saying that one should be equal weight on the sector, and probably the holdings one should have top picks are Ultratech and Birla.
Mangesh, I want to understand how's the ownership right now for all these. Everything is moving right now, be it ACC, Grasim, Ultratech of the world, all the way to Kesoram, Mangalam, which are also seen as probable buyout candidates if consolidation accelerates in the industry. But I want to understand how's the positioning of ownership, institutional ownership, funds, FIs, or is it just the retail action which you observe is high in this space, especially in the mid-cap side?
Yeah, so if you have to look at the trend, I don't think there is a meaningful change in institutional ownership in the cement stocks. Overall view on the sector is that demand, even if there is a deferment or delay in FY25, might just go back to the levels of the GDP growth or slightly better than GDP growth of the country. And given that the government's impetus on infrastructure development, it is expected that cement should continue to do well. When it comes to consolidation and buyouts, we have seen a couple of deals very recently. One is Sanghi and second one is Kesoram. I think what is happening is that the top 5 players are gaining the market share, which is called consolidation. But in our view, the competition between the top 5 is increasing because we have now 2 large players who are basically vying for the number 1 spot. And plus we have 2 or 3 more ambitious smaller players, regional players who want to be a pan-India player. So obviously the capacity addition is concentrated between these large players, and we believe that actual consolidation wherein pricing discipline should improve in the industry is still some years away. And before that, we should see some competition between these players.
So you have a bit of a neutral stance on this sector, but when you say there could be a bit of a pricing decline, what could be that number A? And secondly, individual stocks, what do you recommend? I did hear Birla Corp and another name, but if you can just kind of hash that out further for us.
So as per our channel checks, in the month of December, the prices all India prices are down by almost 2%, whereas the larger decline was driven by the north region, where it declined by almost 3.8%. But overall, if you have to look at the 3Q as a whole, so still from the second quarter level, the prices are up somewhere between 2 to 2.5% range. So QOQ, we would definitely see improvement in realization, and probably we should see softening of cost because power and fuel cost, given the low cost inventories, will start kicking in. So those should be lower. So we are looking at somewhere between 150 rupees increase in EBITDA per ton for the sector in 3Q. And the topics I mentioned is basically Ultratech and Birla Corp. And if you look at the valuations, I think the street is estimating relatively higher EBITDA per ton. So almost, I think 200 rupees higher than what they would report in 3Q over the next 2 years, plus giving a very high multiples on the stock. So I think that's the reason why we are saying that, better time to take money off the table, because given the cyclicality of the industry and increasing competition and near-term demand slowdown because of election, probably we should see some softness in earnings.
Okay, Mangesh, we'll let you go. Thanks so much for making time and speaking with us. Let's move on and bring you the next story that we are talking about, and I think it's about Ayodhya, because that popular tourist destinations is something which is coming up on the radar, and that's because there is a big event lined up there. Let's go across to my colleague Sumita to talk to us about what exactly is happening with respect to the Ram Temple next month, what kind of demand we are seeing of hotel rooms, aviation, etc. Sumita, tell us, what do the numbers tell you?
Right, so ahead of the January Ram Temple inauguration ceremony in Ayodhya, international flight bookings are soaring. And guess what? There's a huge rush of travelers or devotees from across the world to Ayodhya. Although the Ayodhya International Airport is all set to commence commercial operations on December 30th, but the nearest international airport in Lucknow has witnessed unprecedented surge in bookings right after the announcement of the inauguration date that happened in September, RateGain data shows. So there's been a 121% year-on-year rise in international bookings to Lucknow for the weekend preceding the inauguration. When comparing month-over-month bookings, September recorded a 270% increase in international bookings as compared to the month of August. But where are these bookings coming from? Where are these travelers coming from? Well, Saudi Arabia, UAE, Qatar, US, Canada, and even Thailand. But what about domestic travelers? Well, equally impressive domestic flight bookings trajectory seen. There's been a 116% month-over-month growth in September versus the month of August. Now let's have a look at this list that really showcases the growth in arrivals from top domestic origins. So Ahmedabad, as you can see, has clocked a 1138% of growth, followed by Guwahati. Then there's Bengaluru, Mumbai, and Delhi as well. And of course, in response to the increased demand from Ahmedabad, domestic airlines have also launched new direct flights between Ahmedabad and Ayodhya, initiating the service weeks ahead of the temple's inauguration. As far as hotel bookings are concerned, well, Make My Trip says that bookings in Ayodhya are almost 10% of the top pilgrimage sites in the country. Clear Trip says that 30% of bookings to Ayodhya are coming from, guess what, Delhi. So clearly there's a huge rush for the inauguration ceremony, for, of course, travel plans to Ayodhya just ahead of that mega ceremony that's set to happen in the month of Jan.
Telling you all the action which is happening in Ayodhya. Days from now, PM Modi will also hold a roadshow, and our colleagues are also en route right now to Ayodhya, and from there they'll be telling a great number of stories. But right now, let's go across to Sharath on the research desk to tell you what are the stocks which should be on your radar, which have a Ayodhya angle to it. Sharath, tell us.
Well, yes, a very important Ayodhya angle is there coming to the listed space as well. But yes, the discussion is especially on the travel and the tourism part, and there are certain stocks where announcements have also started coming in for Ayodhya, the first one being IHCL. Now, they have signed an agreement to have 2 luxury hotels, and of course the construction will start and expected to be completed by 2027. 2 brands would be there, of course. One will be under Vivanta, other would be under the Ginger brands. Second stock would be Interglobe Aviation. Indigo will be actually launching flights across, especially the daily Mumbai to Ayodhya flights will start from 15th January. But there are other places as well, such as Delhi, Ahmedabad, Kolkata, Hyderabad, Bengaluru, and other cities also which will be getting connected to Ayodhya. The third stock in focus would be IRCTC. It's expected that the company will be actually, the Indian Railways will be actually running 1,000 special trains to Ayodhya. And of course, this will be happening over the period of the next 100 days after the inauguration, which we'll see in the month of January. The fourth stock in focus would be Praveg. And the buzz in the street is that they'll be having the second hotel which will be operational in the 4th quarter. And also importantly, the first hotel or the group of tents which have already been there, they have already got their bookings up, and they're almost, the bookings have been filled till the brim. The fifth stock in focus or the group of stocks might be Ease My Trip, Thomas Cook. As we have checked their websites, the pilgrimage offer packages are being there, and it's also being sold off in a very Russian manner. So apart from this, we can see that most of the travel and tourism related stocks would be in focus with this Ayodhya angle.
So much for putting that into perspective. So a lot of stock market angles to that Ayodhya, Philip, as well. But look at the markets, and that really, warrants attention. Maybe we can pull up the candlesticks and see what kind of, bars we are witnessing on Nifty. And I think it's a bigger rush for Bank Nifty right now. It's almost a 600-point surge. No point in marking that it's a fresh record high there, 48,300. This morning, we were speaking about the fact how 48,000 has been a big hurdle zone, and that's completely been turned as of now. PNB, Bank of Baroda, IndusInd Bank, these are your big movers. And if you talk about the heavyweights, it's HDFC and Infosys all the way, which are actually putting a lot of their weight behind the Nifty right now. But Rajat Sharma also joins us from Sana Securities. Rajat, hi. Good to be speaking with you. Let's start by discussing the private banking space itself. How bullish you would be on that space to begin with the year 2024? Is that one of the top sector recommendations that you would have?
Yeah, good afternoon. Nice to be here on your show. No, actually, it won't be. I think private banking is something which I'm a little wary of, primarily because it's run up a lot, and most of the private banks are trading at very high price earning multiples. I do have some small private banks in my portfolio, one being IDFC First Bank, the other being Federal Bank, and I think these are the banks which have the potential to eat into the market share of larger banks, but. Be that as it may, I think today also the action you're seeing on HDFC and ICICI is not really because of the strength of those stocks alone, but on a day when Sensex moves up 600-700 points, they have a lot of weightage on the Sensex and the Nifty. So when money comes into an index, when there is buying across a market, because even today if you see Nifty is up about 1.2%, but small cap is up only about 0.3%. So it's essentially a lot of basket buying in large caps and in the frontline indices, because of which these banks are moving up. I'm actually a little wary of them. I think they should cool off, correct at some point in future. These are great banks. I mean, these are great businesses. I'm not in any way saying there's any problem with HDFC or ICICI. I just find them overvalued right now.
Rajat, I remember just I think a fortnight back, Federal Bank did put out a kind of a communication to the shareholders, putting out their aim of how they'll be expanding their ROA and ROEs going forward, and they want to position themselves as a pan-India bank, not just southern-based bank and all of that. If they indeed, given the quality of management, one would give them a good assumption that they would be moving in the direction of achieving those numbers. How can the valuation actually change? What is the possibility of re-rating do you see in Federal Bank, say in a 12 to 14 month kind of a period?
I think 12 to 14 months would be too short a time frame. I was reading the commentary that they gave out, and I think the focus is clearly on increasing fee-based income and reaching pan-India, not just to build a bigger deposit base, but also to offer more services, because it's the services aspect which they're weak on. And it's going to take a while, but I'm fairly positive with the kind of asset base they have, the strength of their balance sheet. If they actually make a foray into some of, because they're very well capitalized and they can make that expansion. But I think 12 to 14 months would be not a very long time horizon to look at. Maybe in the next 2 to 3 years. But look, I've had this stock for almost 8-9 years now. And initially did not do anything, but in the last 3 years post-COVID, it has moved from about 45, 46 to about 153 today. And I'm fairly positive that these banks, the smaller banks, IDFC and Federal Bank, would outperform the likes of HDFC and ICICI going forward.
Taken, but there's a big move right now in some of these heavyweights. Kunal, what do you make of this move that we have seen in the Nifty, Bank Nifty, especially the heavyweights, HDFC Bank and Infosys?
I think it's a very strong move, and it's probably an indication that this rally is not fueled by mid caps and froth. This rally is fueled by a lot of large cap names. So it's a different state, because some large caps are in the state of comeback, like Infosys, TCS. They're in the state of comeback. HDFC Bank has already proven that mild bit of comeback, but now I think it's on the verge of a breakout. Reliance Industries is also starting to get into that phase. So it tells you that this market rally, even though the Nifty's climbed up from 2,800 points, 2,900 points, is not built on froth, at least at the fag, at least in the last 400, 500 points, where you're seeing these large cap stocks participate. And I think that should add to the confidence for traders, rather than bring a lot of circumspect or maybe any kind of skepticism.
Okay, don't be skeptical of the sudden move that you are seeing. There is some, quality behind that as well, because it's a large cap that is fueling that rally. But quickly, BTSC ideas, Naresh?
So first would be a buy on SBI, which is showing good strength. Stop loss at 640, target price of 660. Second is a buy on Tata Motors, a new all-time high here. Stop loss at 733, target price of 755.
About you, Kunal?
So I'll go with PSU banking, stocks, and I'll recommend two names over here. First one is a buy on Canara Bank. Extremely bullish on the stock from a short-term play, targets of 460 and stop loss at 419. And PNB is the other stock which is heading towards a very big breakout. So would suggest a buy with a target of 98, stop loss at 87.
Okay, those were the BDSC trades. But Rajat, coming back to the point, okay, you're a bit wary when it comes to the large private banking names. But what are the recent additions that you have made to the portfolio? Which sector, which stocks, which still look attractive? Because a lot of those mid caps, small caps have actually run up.
Yeah, okay, I'll talk about the additions that we've made. It's primarily in pharma space and in real estate. But before I do, coming back to banking, one of the stocks that we've added to the portfolio is actually Paytm, and I tweeted about it saying that this stock can do well because they're almost like shadow banking, quasi banking, and nobody liked that comment. And I will give a disclosure. When this stock got listed, when Paytm got listed at 2100 on your own channel, I said this is the worst stock to buy at this price of 2100. But market cap of 40,000 crores, 630 rupees where it's trading. I'm actually quite positive on the stock, especially after the way it fell last week after they said we're not going to disperse these small ticket loans. And I think too much is being made out of that small ticket loans, 50,000 rupees. I wonder who's taking 50,000 rupees of loan. And I think they let go of these people, the 10% staff, is because those people were servicing these small ticket loans. Look, 3-4 years back, Paytm did not have a clear revenue model. Today, if you look at them, they charge 7 to 9 bips from all the merchants for all the payments that they get for them. They're into dispersal of loans on which they charge a good rate of interest. And they're going to target loans 5 lakh, 3 lakh, 4 lakh plus. And I think I'm fairly positive given the way they, given the reach that they have their sound boxes and these scan codes everywhere. They can reach out to these small merchants and give them loans. And as I said, nobody is looking for a 50,000 rupee loan. People are looking for loans in excess of 3 to 5 lakhs, even the smallest merchants. So that's one stock we've added. The other stock we've added recently is Laurus Labs. And again, Laurus is a stock where, they've done 300% higher revenue in the last 6 years. The revenue has gone up by 300%. And from being a pure, API company which was into retroviral drugs, now they've sort of diversified their basket. They still get more revenue from APIs than they did 6 years back, but that is now about 35% of the revenue, which was about 65% of the revenue. Now they've got into a lot of new spaces, one being biotechnology, which is a huge margin space, which is right now only 2% of the revenue, but I think this basket is going to expand for them. It's available at a very, very good price. I think that's one stock that investors who have 5-7 years should buy. It should give them very, very handsome returns. And the other stock that I've added is Gulf Oil. It's the second largest company in this category. Castrol being the first. Castrol is trading at a price earnings of about 19. Gulf Oil is at 12, and Gulf Oil is expanding faster. They're using and leveraging their dealer network to reach out. They've recently launched EV fluids, which is a little futuristic, but yeah, I mean, they are getting into that segment. They have a first mover advantage. So that's one stock we've added. And keep in mind this stock, even at this price, it's the run up about 100 rupees since we bought, but even at this price, it's got a dividend yield of about 3.5%. So, and beautiful accounts, very clean structure, held 72% by Gulf Oil International. So I like companies with, zero debt, good dividend yield, growing markets, and clean ownership structures. So these are the 3 stocks we've recently added.
That's interesting. Paytm, Laurus Labs, Gulf Oil Lubricants. These are some of the names, and of course, the analysis on Castrol, etc. as well. Thanks so much, Rajat, for making time and speaking with us. Just one